Welcome to the Deep Dive. We sift through mountains of info articles, reports, you name it, and pull out the key insights, basically giving you a shortcut to being really well informed. Today, we're looking at a company you almost certainly use daily, Colgate-Palmolive, ticker's CL. We've got investment analysis, financial reports, but also customer reviews, employee views, the whole picture, our mission, to really uncover what makes this company tick. From its basic business right down to some surprising things that could affect its future. Because it's not just about the numbers, right? It's about figuring out how a company lasts for centuries.
Exactly. And, it might seem like just another one of those steady Eddie companies you don't think much about, but trust me, there's a lot going on beneath the surface. It's a really fascinating look at consumer habits and business endurance.
Okay, let's unpack it then. So the core business model. It seems pretty simple on the face of it. They make and sell low-cost, high-frequency branded stuff, things you buy all the time.
Right. Toothpaste, soap, cleaning supplies, the everyday essentials.
And the company really breaks down into two main parts, right? First, there's oral, personal, and home care. That's like the bulk of what we think of. But then there's pet nutrition, which is actually surprisingly big.
Oh, very significant.
Looking at 2022 sales figures, oral care was a giant, sure, 43%. But pet nutrition, that was like 23%. That's not just a side thing. It's core.
Definitely a core growth driver for them.
In their reach. It's just mind-blowing. Global distribution. Over 200 countries. You find their stuff everywhere. Supermarkets, online, wholesalers. They're even pushing direct-to-consumer now. And get this, about 70% of their sales outside the U.S. and almost 45% from emerging markets, the faster-growing ones. That footprint is just massive.
It really is. And that global reach, coupled with the simple necessity of their products, it rests on what you could call two immutable pillars. First, just basic human hygiene needs. Brushing teeth, washing hands, cleaning. That's not going away. It's non-discretionary. People have to buy this stuff.
Recurring demand.
Exactly. And the second pillar, which is really interesting, is that whole pet humanization trend. Hill's Pet Nutrition captures that perfectly. Pets are family now, so people spend more on premium food. It's emotional.
And the history. Founded 1806. They've seen it all. Wars, depressions, pandemics.
Incredible resilience.
And that dividend history tells the story. 127 years straight they've paid it. And they've increased it for 60 years straight. 60.
Yeah, the dividend king status.
There's not just the streak, it's what it means.
Right.
Right. They generated cash through everything to pay owners. For over a century. Speaks volumes about, brushing your teeth.
Yeah, exactly. And that stability, that simple act of selling toothpaste, it actually masks a much deeper competitive thing going on. It's about creating this permanent spot in your mind, as a consumer. And that's driven by this self-reinforcing flywheel. It's powered by two things, physical availability and mental availability.
Okay, so physical availability, you said staggering network. Just how staggering are we talking?
Genuinely staggering. I mean, think about it. You can find Colgate almost anywhere. A huge hypermarket in the U.S., a pharmacy in Europe, a tiny little Kirana store, like a corner shop in India.
Wow.
Or online, obviously. They reach over 5 million outlets just in India. 5 million.
Okay.
It's about being the easiest choice. When you need it, boom, it's right there.
And then the flip side, mental availability. How do they get lodged in our brains like that?
Decades of massive, consistent advertising. You see it everywhere. Plus, professional endorsements, dentists, vets. Think about every dentist office having Colgate samples.
Sure.
And community programs, too, like Bright Smiles, Bright Futures, reached over 1.7 billion kids since 91. It all works together to make Colgate basically synonymous with toothpaste for a lot of people. It's a mental shortcut, deliberate strategy.
Right.
And that's the virtuous cycle. Being everywhere reinforces the brand in your mind. That strong mental presence drives sales. Profits get plowed back into ads, R&D, distribution, keeping both types of availability strong. It just spins faster and faster, creates this massive wall that's really hard for competitors to climb over.
Right, which brings us to the economic moat. This is where it gets really interesting. The fortress, protecting them. What's it actually built from?
Primarily, it's intangible assets, those brands. Colgate, Palmolive, Hills, globally known, globally trusted. That trust lets them charge a bit more, command that premium price.
Okay.
But maybe even more critical, it makes their products must stock for retailers. Retailers need to carry Colgate. That gives CL huge bargaining power, especially now with retail getting more consolidated.
They need Colgate more than Colgate needs any one store.
Pretty much, yeah.
And we saw that pricing power in action, didn't we? during that recent inflation spike, 2021, 2022, costs went up, they raised prices broadly.
Yep.
And crucially, sales volume didn't just collapse. Q2 2022, pricing alone added 8.5% to sales growth. That's a moat working.
Absolutely. Textbook example. Passing costs on because the brand is strong enough.
And they don't just sit there while store brands try to undercut them, right? How do they fight back?
Through what they call premium innovation, constantly launching newer, fancier, higher margin stuff, things private labels can't copy easily or quickly.
Right.
Think a reformulated Colgate Total with new benefits, or maybe that visible white booster gel they launched in India. It's not just minor tweaks. It creates new, higher value segments where they can charge more.
Okay.
And you see the Moat's stability in the market share numbers. Global toothpaste, pretty consistently around 40% year after year.
That's 40%.
Yeah. And manual toothbrushes, consistently over 30%. That kind of dominance doesn't happen by accident. It's deep-rooted consumer habit and trust.
It seems like under the current CEO, Noel Wallace, since 2018, they've been deliberately trying to make that moat even wider.
That's a key point, yes. It's a definite shift from the period before him, say 2015 to 2019. That period got some criticism for maybe focusing too much on short-term profits, maybe underinvesting a bit.
Right.
Wallace came in and reversed that. Ad spend is up massively, like 50% increase, $1 billion more.
Wow.
Marketing's now averaging around 12% of sales over the last 5 years. That's a big strategic reinvestment in the brand's future.
Okay, so we've got this picture. Dominant brands, global reach, strong financials, reinvesting. Looks pretty solid.
Yeah.
But what about the scuttlebutt? What are actual customers or even employees saying when you dig a bit deeper?
Yeah, this is where it gets complicated.
Because on the surface, things look okay, right? Net Promoter Score, NPS, is plus 35. That's decent for their sector. And they report 86% customer loyalty, especially strong among people who've used the brand for over 10 years.
Right. Looks good on paper. High-level metrics seem robust. But you start digging into online reviews, forums, especially about the new formula for Colgate Total toothpaste. Yeah, you find a completely different story, like intensely hostile.
Yeah.
From exactly those long-time loyal users. It's a real disconnect.
How bad is it? What are people actually saying?
Yeah.
Well, the language is strong.
Yeah.
Tastes terrible, awful, disgusting. Some used much cruder terms we probably shouldn't repeat here. Yeah. Really visceral reactions. And even more concerning, some people report physical reactions. Inflamed lips, swollen lips, a burning sensation.
Wow. Okay, that's serious.
Yeah. And these aren't just random complainers. Many say, I've used Colgate for 20, 30 years, and now I'm switching to Crest. They feel genuinely betrayed.
That's potent feedback, especially the physical reactions part. And interestingly, you contrast that with the view from inside the company. Employee sentiment seems generally pretty positive. Comparably gives them an A+ on culture. High marks for the CEO, happiness. 86% positive reviews there.
Okay.
Glassdoor is maybe a little more mixed. You see some comments like, promotions can be very political, but overall, internally, it seems quite strong.
So you've got this stark divide. Good aggregate scores, decent employee morale. But this pocket of intense, really angry feedback from core users about a flagship product.
Exactly.
Which makes you ask, right, is this just a one-off blunder? A product reformulation gone wrong that they'll fix?
Yeah.
Or does it signal something deeper, a cultural shift maybe? Focus on cost-cutting accidentally trumping product quality.
That's the multi-billion-dollar question, isn't it? Because that economic moat we talked about, it's not built on spreadsheets. It's built on millions of positive customer experiences day after day. That trust, that loyalty, it's like a bank account of goodwill.
Right.
And those angry reviews about Colgate Total, that feels like a pretty significant, potentially damaging withdrawal from that goodwill account. How Colgate responds to this, whether they listen and adjust, that's going to be really telling about the true strength and integrity of their moat going forward.
Okay, let's talk management then. The people steering the ship. Noel Wallace, Chairman, President, CEO. Lifer, right? Joined way back in 87, took the CEO job in 2019.
Yep, a true insider.
And his stated philosophy seems clear. Broad-based, sustainable, profitable growth.
Right. And like we touched on, his time marks that clear shift away from the previous, perhaps overly short-term focus. He's laid out a 3-part strategy. 1, push premium innovation in the core stuff. 2, go after adjacent high-growth areas. 3, expand in fast channels like e-commerce, pharmacy.
Seems logical. Long-term thinking.
Definitely sounds like an owner-oriented mindset, yes.
And you see it in how they're spending money, their capital allocation. That reinvestment in the core business, it's real. Ad spend up 19% in 23, another 15% in 24. That's significant.
Huge increases.
CapEx, the money spent on factories and equipment, also up, averaging nearly $600 million a year lately, about 3.2% of sales. Expanding capacity, focusing on sustainability, and R&D, research and development, clearly a priority too.
Absolutely. This isn't a company just coasting. They are actively investing for the future.
And M&A, their acquisitions, seem pretty focused too. Mostly bolstering Hill's pet nutrition, right?
Exactly. Buying pet food plants, acquiring that premium Australian brand, Prime 100, smart, targeted moves to grow in that key area.
And then there are the shareholder returns, keeping that Dividend King title. 60 years of increases, plus consistent share buybacks. Returned, $3.4 billion to shareholders in fiscal 24 alone?
Yeah, between dividends and buybacks. It's a very shareholder-friendly approach. Which is why a firm like Morningstar gives them their top rating, exemplary, for capital allocation. That's high praise, reserved for the best.
So all this adds up to what you called a financial fortress, this reliable earnings machine.
Pretty much, it just churns out profits and cash consistently, even when the economy gets rough. That's the power of selling necessities.
The numbers show it. Gross margins over 60% recently.
That's just fantastic.
Operating profit growing steadily, $3.98 billion in 23, up to $4.27 billion in 24. It's just relentless profitability.
It really is, and the underlying ratios confirm that strength. Let's look at a couple key ones. Return on invested capital, ROIC. Basically, how much profit they make for every dollar invested in the business. Okay, Colgate's is consistently in the 25-35% range. That's elite territory. Means they turn every dollar invested into 25-35 cents of pre-tax profit each year. Highly efficient.
Wow.
Then, free cash flow conversion. How much of their reported profit actually turns into real cash? It's high, usually 80-90%. Means their earnings quality is excellent, not just accounting fluff. And that cash funds everything: reinvestment, dividends, buybacks. They generated $4.1 billion in operating cash flow in 24.
Solid.
And finally, debt levels. Net debt to EBITDA is pretty conservative, around 1.5x to 2.0x. Very manageable, gives them a big safety cushion. Healthy balance sheet.
Okay, so fantastic business, great management, strong financials. What about the price, if you wanted to buy in today?
Right, the valuation. Currently, it's trading around 25 times earnings, maybe 21 times free cash flow.
And how does that compare historically?
Historically, the PE has often been higher, maybe closer to 30x.
Sorry.
So you could say it's probably a fair but not deeply discounted price right now. It's not screamingly cheap.
But high-quality companies rarely are, right? They command a premium.
Exactly. The market recognizes the quality here, so you usually have to pay up a bit for it. Seems fairly valued for a long-term owner at the moment.
Looking forward then, where's the growth going to come from? What are the main engines?
The biggest one, I think, is that premiumization and penetration story in emerging markets, especially India. That's a long-term trend. As incomes rise, more people start using their products. That's penetration. And then, crucially, they trade up to the more expensive, higher-margin versions. That's premiumization. It's a powerful dual engine.
And the secondary engine?
Hill's pet nutrition. That pet humanization trend isn't slowing down. It's a really vital growth driver for them, too.
Makes sense. But even for a fortress, there are always risks, right?
Yeah.
Permanent risks that could really hurt them long term.
Absolutely. No company is immune.
What are the big ones for Colgate?
I'd say number one is probably erosion of brand relevance, especially with younger generations, Gen Z. If brands like Colgate start feeling old or just don't connect, that's a problem.
And that risk gets amplified if you have major product screw-ups, like maybe that Colgate Total issue.
Exactly. A big quality failure could really accelerate that erosion of trust and relevance. Disruption. From increasingly sophisticated private label store brands and also from those agile, digital native, direct-to-consumer brands, they can chip away at market share and pricing power.
Okay.
And finally, just chronic margin pressure. Maybe input costs structurally rise, like climate change affecting mint supply, for example, or just ongoing unfavorable currency fluctuations given how global they are.
Right. So that brings us to maybe some second-level thinking. The standard market view, the consensus. What is it for Colgate?
Often it's seen as, boring but stable, a low-growth dividend payer, kind of a hold rating usually.
Yeah.
The bear case usually points to slowing growth, maybe FX headwinds hurting reported results. Pretty standard stuff.
But you're suggesting a more contrarian view.
Well, based on our deep dive, yeah. We think the market might be underestimating the long-term impact of that strategic shift under Wallace, that aggressive reinvestment.
How so?
The market's perception might still be stuck in that 2015-2019 period of underinvestment.
Okay.
So They see the increased spending now on ads, on R&D, purely as a cost that's dragging down near-term earnings.
Instead
of seeing it as a necessary long-term investment to widen the moat and secure future growth, they might be missing the compounding effect of that reinvestment.
Interesting. So let's flip it entirely. The red team challenge.
Yeah.
What if the basic assumption is wrong? What if the moat isn't a fortress? What if it's actually a mirage? Just, past glory that's fading fast.
Exactly. Let's explore that dark side. In that scenario, the really angry reaction to the new Colgate total, that's not just a blip, it's the canary in the coal mine.
Yeah.
It signals the culture has shifted. Finance spreadsheets are now more important than the actual product and the customer experience.
Ouch.
The trust built over a century starts getting eroded. Advertising then isn't strategic, it's just tactical desperation trying to cover up product issues. And maybe those massive legacy brands just can't adapt to what younger consumers want now. Clean, natural, sustainable. Maybe Colgate just starts looking old and chemical-laden to them.
So if that red team view is right, what's the outcome?
You're looking at a melting ice cube. Market share bleeds away to DTC brands, to private label. Pricing power vanishes. Returns start reverting to average or worse. Investors could face permanent capital loss. It's a scary picture if that's the true path.
Definitely provocative. So wrapping up our deep dive on Colgate-Palmolive, it really comes down to this core tension, doesn't it? A company with this incredible history, strong financials, but now facing this really crucial test. Can they adapt? Can they maintain that customer trust, especially after seeing that backlash on a key product?
Precisely. And it leaves us with a thought, maybe a provocative one for the listener too. What responsibility do these huge, long-standing brands actually have to their most loyal customers when they decide to innovate or chase efficiencies? And, how fast can consumer sentiment actually turn against a brand, even one with decades of history, based on just one bad product experience?
Something to think about, for sure. We definitely encourage you to keep observing, keep asking those critical questions about the brands you use every day.